Hey everyone, welcome to the Tech and Real Estate Podcast, where we bridge the gap between real estate and technology. I'm your co-host and data scientist, Ariel Herrera, alongside with
Rivas. Welcome to the show.
And today we have a special guest, Michael Salafia, Managing Director and Founder of Stax Equity. Welcome to the show, Michael.
Ariel, Jose, thanks for having me on.
Awesome.
Yeah, thanks for being on with us.
Yeah, we'd love to dive into your background, but before we get deep in there, if you could just give the audience a brief understanding of who you are, what Stax Equity is, and what is the problem that your company solves.
Yeah, absolutely. So at Stax Equity, we're a private equity fund that specializes in commercial real estate investment. Specifically, we engage in the redevelopment of single tenant net leased assets. We're very big in the gas station and convenience store space. What that means in regular terms is we buy properties like a convenience store or a gas station or a fast food restaurant. We redevelop it, bring in a new tenant, and then we package the property as a triple net lease investment and sell it on the market.
Excellent. And how long has your company been around?
We've been doing this for almost a year now. We started out in October. I have a long history prior to that, going into that, and sort of my partners in the firm. But that's how we got started. And the big problem that we solve, I mean, it depends on how you look at it, but a big thing is that we're taking a property that is a fantastic piece of real estate. It has strong commercial real estate fundamentals, but typically it'll have an underperforming operator. So the property's kind of fallen into distress, and we breathe new life back into these properties. We create a lot of jobs in the process as well.
Excellent. And from what we've seen in your background, that there's AI and some tech implemented as well. But before we dive into that, Michael, would love to hear a little bit more about your background and what led you to this place now. Were you always in real estate?
I was born into commercial real estate. When I was first growing up, my parents and I literally lived in an apartment above one of the stores in a building that my family owned. So my family's been commercial real estate owner operators for over 100 years. For me, when I was graduating college, it was in the midst of a financial and crisis and collapse of the real estate market. So I pivoted and went into tech. And that's kind of how I got started here. What led me down this path to creating Stax has been a very interesting journey. But I've done several tech startup companies, and I've done a lot of consulting engagements. Some highlights would be Moody's commercial real estate analytics service and many of the national REITs. And that's kind of how I cut my teeth in the net lease marketplace. And prior to starting Stax, I was a broker at Marcus & Millichap, which is a leading commercial real estate investment firm that specializes in sales.
Excellent. That's a great experience. And through that period of time, when you made the transition to start your first startup, I assume, what was that, and what were some challenges that you faced that helped when you created Stax Equity?
Well, I've been through it all, from doing Series A, Series B fundraising rounds to exiting, creating the initial corporate structure, creating the initial capital stack to launch a serious company, and learned through trial and tribulation along the way. So when it came to Stax, we were able to do this in a very accelerated time frame due to the prior experience.
Excellent. And go ahead, Jose.
Oh, that's great. Yeah.
And when you started Stax, if you could give a bit of a background for someone who might not know what triple net lease is, what is that, and who are you looking to focus on solving a problem for initially?
Yeah, it's really interesting. So a triple net lease refers to, it's a structure of a lease on a property, right? And let's take a step back. We have commercial real estate. Commercial real estate is any real estate with more than 4 units, right? If it's an apartment building has more than 4 units, becomes commercial, or anything else, right? It's basically not houses. That's how you can think of it. Okay, inside of the triple net lease space that we're talking about, these are properties where they are leased to a tenant and the landlord has 0 management responsibilities. So it's a very specific type of property ownership and investment, where it offers a truly passive income stream to the commercial real estate investor. A typical example would be, and I challenge you this, when you're driving home, take a look at the CVS on the corner. Take a look at the fast food restaurant that you drive by. All of these properties that you see, most of them are single tenant, triple net leased properties, right? And a lot of these large corporations, in fact, the majority of them actually sell their real estate to independent landlords or institutional investors. And those are the people who own the real estate. Now, the tenant themselves, they take care of all of the responsibilities for the property. So the landlord is functioning almost like a bank. They're holding a note on the property and they're getting consistent lease payments over a set period of time. Most of the deals I sell, for example, have a 20-year triple net lease with 2% rent increases. So when a landlord comes in and purchases one of the properties that we've redeveloped, they're able to just passively collect income. Literally, it's just direct deposits every single month for 20 years.
And how do these properties fall into distress?
Usually due to poor management. Almost always due to poor management. Just like how any business falls into distress.
Right, like possibly not managing the outside of the property, like roof or landscaping, or what are some common examples?
Typically having a poor operator as the tenant, right? So it'd be more the operation of the business. The physical property itself could fall into distress, but that's less likely because it would need to be functional for the business to continue to operate. Usually it's due to literally the business operator not doing a good job. Very easy example, they're not open enough hours, right? I've been buying a lot of gas stations where we check their hours. I'm like, you're open from 10 a.m. to 6 p.m. You can't do that. You need to be open 24 hours if you can to capture all the revenue, right? So they're not making enough money at that business because they're simply not open enough. Mm-hmm. And there's a variety of reasons, but that's a very simple example.
So is that because of the capabilities, or I guess one of the reasons could be, right, the capabilities of the property owner? You know, maybe they don't have enough people to stay open those hours, or resources to keep the lights on for that time, right?
Yes. Or during COVID, one challenge that a lot of the fast food operators faced is the inability for them to get effective labor. There were so many incentives from the government for people to stay home and kind of collect money from the government that a lot of people at the lower wage jobs said, yeah, you know what, it's not really worth it for me to come in and work here anymore at your Taco Bell. So the Taco Bell didn't have enough staff. They'd always be busy, but you know, they can't stay open as long as they'd like to because they don't have the staff.
Yeah, that makes sense.
So because of that, did you focus on, or is your company focused on areas that maybe had more restrictions post that time period?
Areas meaning?
Yeah, so when you were, your company's evaluating these distressed properties, is there a focal point, maybe like northeast of the US or a certain region that you focus more into?
Well, we're based in Miami Beach, Florida. So we love Florida as a state, and we're focused on growth states, right? And this comes from kind of my background, studying under the chief economist at Moody's CRE. that gave me a very holistic perspective into commercial real estate. So I'm looking for areas where there is very stable economic growth factors. A very key example would be job growth, right? There's certain pockets of Florida that I love because there's lots of new jobs coming in. They're all high paid jobs, and there's plenty of room for developers to build more housing to accommodate the influx of population that will continue to grow in that area. But the areas are still new enough that the property value is not overinflated already, right? It's very challenging for me to get a deal done here in Miami the way I'm doing them because the dirt is so valuable already, right? But there are other parts of Florida where the dirt really hasn't fully caught up yet to its full potential, but the job market's there and the population growth is there, and there's new people moving to these towns every single week. So those are the areas that I concentrate in, high growth submarkets.
Makes sense. And what are some challenges when observing these areas? So for myself, when I try to aggregate data, say from the census, some of that data could be so outdated. But of course, you want to look at the first and foremost latest data. So what are some challenges that you've been able to overcome there?
Analyzing the data, I agree with you. It's very challenging. So one thing that I do, I face the exact same challenge, is looking at the local news and kind of focusing on the actual events that are driving the projections that you can take from the data. Okay, so for example, are you guys familiar with the Space Coast of Florida? They have SpaceX and NASA, so it's been dubbed the name Space Coast. Okay, well, that's a great area where it's very up and coming, and there's a lot of job growth. Now, I have a massive amount of data for the predictions of how that job growth is going to happen, but what I'm actually banking on are real events that are transpiring. For example, Lockheed Martin signs a lease on an office and it has X amount of square feet, and the press release indicates how many jobs they expect at that office, right? That's a hard event, right? Or Amazon has broken ground on a new logistics facility. Okay, they've broken ground, not just committed to building it there. They're actually started construction. That's a great event that we can really bank on.
Right. Broken ground and just a light commitment
Yes.
is a completely separate thing, because I've tried to invest in an area previously in New Jersey where it was supposed to have all this type of growth coming in 2020. Things got derailed and we still haven't seen like the ferry that was supposed to be built. So that's excellent that you're pulling that information. Is there like an automated process that you have for that, or
it's there. I don't have an automated process for that. I have an automated process for a lot of things.
Yeah.
Computating data and have been pulling it. And I'm sure there's folks who probably have much better ideas than I do on how to automate that. But no, it's just good old fashioned research.
Great. So as you conduct this research, you and your team, as to what areas have a lot of growth and the property's value, or what you call it, hasn't caught up yet. Now that you found the area, what's the next step to try to acquire the triple net lease property and then add value to it?
Well, let's take a step back for a moment. As much as I love the area, this is a common concept that I've seen amongst people first trying to get into commercial real estate, right? And let's just distinguish a key fundamental difference. Residential real estate is worth as much as someone's willing to pay for it. I might be willing to pay more than other people for a house because I really like the location, how close it is to my office. So it's more valuable to me personally. For commercial real estate, it's only worth as much as the income that can be produced from the property. And that income is produced typically by a tenant operating a property. So let's take a convenience store. right? And it's 7-Eleven. It doesn't matter where it's located. 7-Eleven can only sell so many fountain drinks per day to make X amount of dollars to pay X amount of rent to the landlord. So the property is always going to be valued based on the amount of income that it can generate. And we measure that through rate of return called capitalization rate or cap rate.
Gotcha. So within your analysis, are you taking into account, I'm guessing you have to, right, take into account what the needs of that neighborhood or area are?
Yeah, exactly. So we get a lot of mobile data, and then we have a proprietary predictive analytics model that we've developed. So I took all of the best core principles that I learned about through working with Moody's. I took aggregate of 100 years of brokerage experience that I learned from interviewing and working with all the top people at Marcus & Millichap and all of the top national net lease real estate investment trusts, most of which are publicly traded companies. And I kind of amalgamated this into one model, which is a piece of software, right? And now my team of agents and analysts can quickly go through and extract and enter in the key data points, a lot of which is also automated. We'll pull in the data from a service provider. And then that will quickly formulate a business plan for said property. So I'll be able to put it in and see how much that property could bear in rent, right? And I'd be able to get a sense of what kind of cap rate the property would trade for should I package it and sell it as a 20-year triple net leased asset. And we can also see the comparable properties nearby and see what the competing convenience store would be doing, or gauge the level of competition at that store in comparison to other stores in the region. It's a very sophisticated proprietary model, but that's how we're able to underwrite so many properties so quickly.
Great.
Yeah, that's great. That's a good use of you know, AI and models. Yeah.
Yeah. And that the machine learning algorithm just keeps getting more sophisticated in the rules and the way it judges things. We have a lot of controls and mechanisms in place right now because, again, it's early stage. We started doing this in October, but it's going really well. And everything that all of the investments we're making have proven to be accurate in our forecasting. Because we'll know once we buy the property and we bring in a new tenant, we'll see the way we structure it. We'll get to see what sales that tenant's doing, right? And how healthy their rent coverage is. And we get to actually prove that our forecasting was accurate. And so far, it's been very accurate.
Excellent. Yeah, and you can have a feedback loop into the model to even further improve it. And how was it for you building this team of folks to start this company, build this proprietary algorithm? Was it difficult to get the AI engineers to understand the problem set, or what were some challenges that you may have faced?
Yeah, it's been very difficult to get the right talent. You know, there's a lot of people who talk and are good at one thing or good at another thing. So I've had to bring in multiple groups from multiple companies. I have one company, for example, just doing the iPhone app, which is kind of separate and not AI. It's just an iPhone app. But my point is, yes, it's been challenging to get the right folks. In terms of breaking down the differences, I would say, you know, we're in commercial real estate. It's investment sales. A lot of the folks who work in this industry are very aggressive and not necessarily technology focused. So we're really bridging a gap here. And I think the mixing of the two cultures between the tech guys and the real estate sales guys that's been the biggest challenge.
Oh, I bet. And throughout this journey, as you're trying to refine your model, what's some of the processes that you take to make sure that if there's maybe a data point that wasn't as accurate or that maybe shouldn't have been applied, like, do you have a QC system in check? Like any quality
I-
checking being done on the testing data or training?
Yes. And again, we're more focused on validating the results of the investment decisions, because ultimately what our models are doing are guiding investment decision making. So what matters for us is, look, we bought a property. The key output of the model is establishing a rent and a valuation. Did that valuation hold up? Did we actually reach the numbers that we forecasted in the business model? And if we failed, that would have major implications, major financial implications. And so far, we're just win-win-win. So, yeah. But we're
That's
always
great.
adjusting and tweaking and testing the data. And it's hard to make a change in the model. The biggest challenge that I face, and I'd love to get feedback on, is, hey, I have my data set. How do I change the model without impacting my historical data set, for example?
Mm-hmm.
And you have to keep in mind, I am a private equity investment manager and commercial real estate investor at this point. I do have a background in tech, but I'm consulting with a lot of expert engineers to get all of this done. Although I did make the base model for the algorithm myself.
Very impressive.
Oh, well.
Thank you.
Yeah. So is there a timeline that you guys look for, to measure that success? Or does it vary by the type of property that you're deploying?
I mean, it would vary by the type of property. I want to see it be successful from day one.
Right.
But sometimes it takes a year or two for a property to ramp up and get to where we were hoping it was. But more often than not, it's there within the first 90 days.
That's great.
And do you work with other investors perhaps? And if you do, how do you educate them on what your company does and the technology behind it?
I show them a demo.
Mm-hmm.
The best way is just bring them into our office. We have a meeting. We're always working with investors. Everybody in investment is working with other investors all the time. It's the nature of the business. So we do a lot of in-person meetings, and we'll do live demos and just show them the work. We'll just show them how the software works and how we're doing it. And we'll show them the database behind the scenes and give them a sense of, like, hey, here's one data source where we showed you the mobile foot traffic data from these 3 providers, right? Here's what it looked like before it made it into our software model. Okay. So we took this information over here and now we put it into our model over here. And now here's what the output looks like for you. And that's how we arrived at the numbers that you've just agreed to.
Yeah, that helps to make a underlying model that could be complex just seem a lot more easy to digest, especially for those who may not be as tech focused. And what do you say for maybe similar companies to yours that are a little bit more, put it nicely, outdated? What do you think that at some point those who are not utilizing large data at scale or utilizing AI will fall behind?
We'll see. I've met many very successful multimillionaire commercial real estate investors who use no technology beyond Microsoft Outlook and Excel, and they get everything done that way. And they've been doing it that way for over 20 years, and they're very successful. So I think it really comes down to more of an individual level and what your goals are to achieve. Can you achieve the scale and the deal volume that we're doing at Stax Equity without these technology tools? No. And those who are not embracing it will be left behind. They won't be able to keep up. You can't get the deals done fast enough. But you could still be very successful at a smaller level.
Agreed. Yeah, if there's still systems in place. Someone once was giving me a story of how they were working with an very successful investor in the single family space, and kind of just put down a napkin, was writing down numbers, and was like, "Here, I evaluated a deal." And that was his method. He probably goes more in depth obviously. But like you said, there are still methods that are a little more antiquated that work, but in the long run, to do it at the scale that, say, like your company does, probably won't be able to.
Exactly.
Yeah. And aside from that piece, where do you see possibly ChatGPT coming into your space at all?
That I think there's a lot of room for just crafting some good prompts, and the data sets are out there. So it's a matter of someone connecting those dots, right? We ask the same questions on repeat, and it's the same data lookups, and it would be very easy to create some prompts that take a question, break it into 2 or 3 different chunks of data from various sources, and then combine that into a language script to get the output. There's a lot of potential there, but we need somebody to work on it.
Yeah.
Right.
So, and in that vein, because of the financial implications, what kind of level of trust can you put on AI for for these kinds of deals, for putting together these kinds of deals? Is there a human element that you think will always have to be there to
commercial real estate is very complicated, and there are a lot of qualitative factors. The notion of it like purely using a quant model for commercial real estate on an individual property level truly doesn't make sense. The quant model will get you there most of the time, but you need qualitative factors. That's why for us, we have teams of experts in retail operations. For the gas stations, we have experts just in fuel supply and fuel supply management, petroleum. We have environmental experts. All of these folks get together, and once we finish our quant model, we do a qualitative analysis and create basically a mini business plan for each property. And that's where the human factors come in. The AI and the models are not sophisticated enough yet to be able to consider every single data point that it could impact a property, or even and that data is not, they can't even extrapolate the data, right? Like, how do I say it? I don't know. There's just certain things that are human factor, right? That you can't understand necessarily just through the data.
Yeah, if only when Zillow was doing Zillow offers on their single family properties, if only they could have heard this piece of advice from you, they could have saved a lot of money.
Right. I mean, that's a great example. There's certain things about houses where I get it. You're basing it on comps and historicals and school district and blah, 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 blah. But, people who live in that neighborhood might know that it doesn't smell good on that side of the street.
Mm-hmm.
Yeah.
So you shouldn't pay
it's
that
really
much
about
for
efficiency. Yeah.
Mm-hmm. Yeah. Mm-hmm. But I mean, what we're getting done in an hour at Stax Equity, it takes most other firms a full business day, right? So that's how we're able to do so many deals so fast. So it really does get us ahead. Now, here's the best part. By using that model and getting through all the quantitative analysis in a fraction of the time, that frees up more time for the think tank to get together and figure out all those qualitative factors. So we're not rushing through our business plans. We're going into excruciating level of detail and really figuring stuff out.
And in that level of detail, does weather or hazards in that sense play into it? Just given that it's Florida, of course.
All the time. Yeah. Weather is my biggest challenge for doing construction.
Okay.
And especially in other parts of the country. I always forget because I'm in Florida, but I was at ICSC conference in Las Vegas, and I was chatting with some gas station developers from Wisconsin. And they were like, Michael, what projects are you doing this summer in Wisconsin? I'm like, what do you mean projects this summer? Oh, because the ground's always frozen. So you'd get most of your construction done in the summer, right? So it's interesting. Yeah. dealing with the hurricanes in Florida can be tough. That's
yeah.
one challenge we have.
Yeah.
Is Fort Myers on your radar at all for future areas?
You know, I've sold several properties in Fort Myers. I'm not currently doing any deals there, but I do like that submarket. I'm not as bullish on their job growth, but the population growth looks great. But I haven't personally done any research into that job market specifically. But that whole Tampa corridor, if you want to break down Florida, right? Like Miami and South Florida as a whole clearly leads the way, but again, it's very saturated. So you have very compressed cap rates, very high prices. There's not as much room to add value there. It's very tight. That's why I like markets like Orlando, Tampa, Jacksonville, Space Coast, Fort Myers, where there's strong job growth and population growth, but it's not as compressed and the prices are not as inflated yet.
Makes sense. I'm in the Tampa market, and there's definitely been a lot of growth and a lot more to come. Do you believe that migration trends will continue, of the large influx of those from the north, east, for example, coming down towards the southeast?
Oh yeah, I think the trend's here to stay. It was only a matter of time. For me, I grew up in the Northeast, and it's cold and uncomfortable most of the year. And it's just really nice and a lot easier to live in a state like Florida. And also, you don't have to pay state income tax. So now that you see it big time in Miami, where we've reached a critical mass of people who have moved here from New York City. For myself, I moved to Miami from New York City. So I'm one of them, but I did it a long time ago. I'm not part of the COVID migration. I did this independently. But now that there's a critical mass of people here, it just makes sense, and it's a very nice place to live. So I think we'll see more of that movement for jobs, quality of life, as well as tax incentives.
Awesome.
Yeah.
And where do you see Stax Equity going in the next 3 years or so? Like, what gets you really excited about your company?
So we launched our first private equity fund. Within the next 3 years, I'd like to be on fund 3, maybe even fund 4 or 5 by then, once we close out these rounds. And we're launching an iPhone app this summer. Before the end of the summer, it'll be available in the Apple App Store, obviously the iPhone App Store. But in this app, it's a part of our private access program. So it would give our investors exclusive access to our developer direct triple net lease inventory. And these are highly coveted deals that will not be available on the market or on any kind of like multiple listing system websites. And it'll be, you'll have to apply to join the network.
Yeah, that is awesome. So definitely won't be found on LoopNet.
No, it's the opposite of LoopNet. There's too much stuff on there, and it's oversaturated. It's played out. This is a curated list for a specific type of investor. So if you're that investor or serious, you can get on this app and see all the deals.
Great. And if I'm a commercial real estate investor and I'm looking to get in touch with you, your company, and possibly be able to invest, where would I be able to find more information?
Yeah, you can visit us on online at staxequity.com, or just plug it into Google. All of our contact information's there. Again, my name's Michael Salafia. You can also just plug my contact information into Google or send me an email, michael@staxequity.com.
Well, thank you so much, Michael. I really appreciate your time and learned so much, Jose and I, on not just commercial real estate, but the great work that your company is doing. So thank you so much.
Thank you both so much for having me on.